Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and the first test of the 20-week moving average. So if you guys like the content, please go ahead and subscribe to the channel, give the video a thumbs up, and also please check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So in this video, I want to really talk about the two primary cases that I could see playing out. Right? I don't have a crystal ball or anything, but I want to talk about what are the two likely scenarios that Bitcoin may experience over the next, say, year. Okay. Now, the first thing we need to do, and I want to make this inclusive so that if you haven't ever seen my videos before, you know where I'm coming from. So the first thing we're going to do is we're going to take a look at what happened today. Now, you can see that we had a test at the 20-week moving average. In fact, we had a wick. If you zoom in, it came directly down to the 20-week moving average, right? And we've been talking about this 20-week moving average for a really long time as being the first or the final test for a bull market. Now, the first thing you need, right, is I would say you would need a golden cross. And we've had that. We've had a few of them. And they pop up due to natural volatility in the market. And each cycle, we have more golden crosses because of natural volatility during a lengthening cycle accumulation range, right? So let me just quickly show you the last golden cross, right? And the golden cross, of course, is just the 50-day crossing the 200-day moving average. So it's basically just these two moving averages right here. So this was the last golden cross. It happened back on May 20th of 2020. You can see we had the crossover of the 50-day and the 200-day. So we had our golden cross, right? The other thing that I would say needs to happen is we need to see an explosion above the 20-week moving average, right? And this was something we've been following a very long time. In fact, if you remember, we followed the last move against above the 20-week moving average back in January, and during that time we saw it basically explode above the 20-week, but ultimately it failed to hold it as support. Now, the reason we talk about the 20-week moving average, of course, is because it tends to hold it as support during a bull market, right? During a bull market, it holds the 20-week moving average as support. If I delete some of the percentage moves here, you can see that it was the 20-week moving average that ultimately held as support during a bull market. Now, if we go back to the beginning, right, and we look at the 20-week, we've shown before that in the first cycle, once above the 20-week, it held it as support, right? We didn't really have to retest it. It started going parabolic right away. The second time, it was 2 times above the 20-week, right? So we came above the 20-week, failed to hold it as support. Second time, it was a check mark, held it as support. And from there, it was just a continued parabolic move up. And the first thing you can see is once we got above that 20-week, it was an explosive move up, right? If we take a measured move here, from the 20-week up to the peak, it was about an 80% move up. So this is what we want to see. We want to see an explosive move upwards after breaking the 20-week moving average, and this is what we've seen. The third and final thing, and we've talked about this for a long time on the channel, right, is we want to see the 20-week moving average confirm as support just like it did during the last market cycle. We want to see it confirm as support. And if you go over here and look, we had the wick of the candle has actually come down directly to the 20-week moving average. And another thing, in the first cycle, it took us 1 try. In the second cycle, it took us 2. And I'm talking about bear markets. In the third bear market, you can see that we already moved above the 20-week back in March of 2019. We moved above it again in right here in January of 2020. And then again, we moved above it in April. So we had 2 failures to hold the 20-week moving average. So if things are linear, right, and we have 1 for the first bear market, 2 for the second, and 3 for the third, then maybe we're good to go. But maybe that's not linear, right? Maybe it's not so simple, right? Maybe it's going to take longer. So the first thing we have to recognize is, what is our target? So the target, if you follow lengthening cycle theory, which we've talked about on this channel extensively, is a $20,000 Bitcoin, a sustainable $20,000 Bitcoin by the end of 2021 or the beginning of 2022. We could always see a bubble beforehand to 20K, but I think it would hold resistance and we would come back down. Now, the two main scenarios that I could see playing out in order for us to get to that 20K is for the first scenario, right, being the more immediately bullish scenario, would be holding the 20-week moving average. So holding it, coming back up, right, and then continuing on our journey up to the prior all-time high and getting there in about 16 months, right? And it might not be as smooth as this. It could look something like this, where it goes into a bubble and then comes back down, and then we continue going up. So this would be the most, I would say, the more bullish scenario in terms of Bitcoin getting to the prior all-time high of 20K in a sustainable manner, right? We don't want the bubble 20K, we want a sustained 20K, which means that we need to methodically move up to that point. Now, if you're wondering why we've chosen this point, the reason is because we recognize that lengthening cycles are the name of the game, and we have this pattern essentially of a parabolic move, a bear market, a slower move up, a parabolic move, right? And you rinse and repeat: a bear market, a slower move up to the prior all-time high, right? That's what the yellow line shows, to the prior all-time high. Once you get to the prior all-time high, you go into price discovery mode and you have a parabolic move up. Again, a bear market, a slower move up, and then from here, it's price discovery mode. And the reason I'm putting it out in 2021 or end of 2021, early 2022, is just recognizing, the last time we reached the prior all-time high, we were within the regression band, and I imagine we'll be within the regression band again. If you extend the regression band out, it'll basically get to a $20,000 Bitcoin in another 16 months. So the most bullish scenario would be that we hold the 20-week moving average and we continue up on our merry way in a very bullish manner to 20K, and then we go parabolic. That's the first scenario. The second scenario is a little bit more bearish, but it's not long-term bearish. So the second scenario I could see playing out is we go below the 20-week, but I don't anticipate we would see something like we saw in March, okay? So if you look back in March, we had a very significant drop, right? From February 2020 down to March, we were looking at a 60% drop of the price of Bitcoin. I don't think this is likely to happen again in the immediate future, okay? What I could see happening is I could see us breaking the 20-week moving average one last time to the downside this cycle, and then maybe holding it as support in 6 months. So if you go back and look at when we tested the 20-week as support, they tend to be about 6 months apart. And every single time we say it or we break it, I say, all right, we're kicking the can down the road. The next time we're likely to have a significant test of it is approximately 6 months from now. Now, if you take a measured move, the reason is if you look here, back in September of 2019, this was our first major test of the 20-week moving average, right after breaking out. So we had that explosive move, we tested it, and we failed to hold it. And here, this was back in September of 2019, we said, okay, approximately 6 months, maybe even up to 12 months, but 6 to 12 months before we get a reasonable retest of it. And you can see that the next time we broke through the 20-week moving average was 16 weeks later, but the first time we actually tested it as support again was approximately 154 days later, which is approximately 6 months. So this was the first time. So our first test failure to our second test failure was approximately 6 months. Now, if we take another measured move, right, when we broke through this, I said, all right, we're reasonably looking at kicking the can down the road and another 6-month window of continued accumulation before a potential retest of the 20-week. And again, we go 6 months in advance. You see it's another 189 days or so, 27 weeks, approximately 6 months. And this makes sense, right? I mean, this test here is close to being in March. This one was September. September to March is 6 months. And then, almost March, this is February, to August is another 6 months. So it seems to be approximately 6 months from test to test. And so if we do break below, I don't think we will go as low as we did last time. I don't think we're going to go to 4,000 Bitcoin. I really don't see a $5,000 Bitcoin. The very lowest I could theoretically see us going, and again, this is not financial advice, the lowest I could see us going would be 6,060, approximately 63. Well, 63 is the bottom of the regression band. 65.78 is the 20-week or is the 200-week moving average. So, worst case scenario in my eyes, we go back to that point. I'm not even sure how likely that is. Okay, but the moral of the story, right, is I either think we're going to hold the 20-week now. At $9,800, which by the way will continue to move up. So it's going to be harder to hold it because the 20-week is going to continue to move up because of all the bullish price movements we've had over the last few weeks. The 20-week is going to continue to catch up to the price. So the price is going to have to really perform well in the short term to stay above the 20-week. And there's a chance that it could happen. On the chance that it doesn't happen, I think that the next test of the 20-week will be the one that confirms the bull market. So in my opinion, it'll either be this one or the next one. And the reason I say that is because if it's not this one, then we're looking at probably another 6 months to retest it in any meaningful manner in the future. So approximately another 6 months. That would take us out until maybe March of 2021. And once we get there, March of 2021 is all the way out here. So March of 2021 is right here. And by this point, right, we're going to really need to start making up ground to get to that $20,000 Bitcoin. Because the way to get to it, again, is a slower move up, right? It's kind of like a 2 steps forward, 1 step back approach. It's not going to monotonically increase to 20K, which means it just goes up every single day, right? It's going to go up and it's going to pull back. So we either do it now, we either hold it now and slowly move up from here to 20K, or we break the 20-week, maybe come down to maybe the 100-week that's currently at 76, 78, maybe the 50-week, which is at 8,700. So we either hold it now as support and confirm the bull market is starting and we trickle back up to 20K over the next 16 months, or we break it, we go back down, and then sometime in maybe the first quarter of 2021, we test it as support again, and then we hold it. And the reason I say this is because I think that we are going to get to a sustainable 20,000 Bitcoin sometime in the next, within about 16 months or so. So the last quarter of 2021 or the first quarter of 2022. And if we're able, and in order to get to that point, we need to start making progress, right? We need to start making progress. We either need to make it slower now or a little bit accelerated in the future, right? If we do it now, if we hold it now, then we can stand to gain about $600 a month in terms of the average Bitcoin price. The average price trickles up by about $600 a month from now for the next, say, 18 months or so to get us to a $20,000 Bitcoin. Or we come down and then go back up in March, test the 20-week. And by the way, the 20-week, if we fail to hold it, right, and we test it again in March, the 20-week might be at $9,000, right? It could be at a lower value. And so we would test it a fourth time. And at that point, I think it would certainly hold, or I would anticipate it holding if it does not hold now. And the reason is because I think that by that point, we really need to start making progress to the 20-week in a non-speculative bubble format, right? We need to move up slowly rather than see a bubble to the prior all-time high. And once we get to the prior all-time high, it might take a couple tests to break it. But once we get there and pass it, this is when I imagine we would go parabolic to ultimately see, Bitcoin, really see what Bitcoin's made of in 2022 and 2023. And so a lot of people, I think, missed out on the last bull run for Bitcoin. I think a lot of people kind of got in during the altcoin mania of late 2017, early 2018. So I think a lot of people are kind of disenfranchised really with what Bitcoin is truly capable of, and they think that altcoins are the way to go. But when Bitcoin makes that move to 20K, I think the market will stand still and watch Bitcoin. And even now, when Bitcoin makes these corrections, the altcoins are losing a significant percentage against Bitcoin every single time that Bitcoin comes down. So I would say be careful with altcoins right now. The reason being that if we do drop below the 20-week moving average, then most altcoins will bleed heavily against USD and Bitcoin. And you might say, well, they already have, and that's true, but I would contend that they would bleed a lot harder against Bitcoin and USD if you see weekly closes below the 20-week moving average. So to recap, we've had our golden cross, right? We had an explosive move above the 20-week moving average, which we tend to do when we break the 20-week. We've now tested the 20-week moving average, right? We showed the wick exactly down to the 20-week moving average, right? Let's zoom in and show it again. So we have the wick exactly down to the 20-week. We could continue to come down and continue to test it for days or weeks, right? But we do have a test of the 20-week moving average, where we held it as support. So those were the three things we've been saying all along that need to happen to really get the bull market started. So what I'm looking out for over the next 2 or 3 weeks, I think we're probably going to decide this in the next 2 or 3 weeks, we're either going to hold the 20-week as support and start heading back up, or we're going to break it and we're going to have, a last opportunity, right, over the next, say, maybe 4 to 6 months to accumulate Bitcoin before we hold the 20-week as support and really start heading north in terms of the price. So again, this is a macro movement, right? We anticipate that short-term moves are a random walk, geometric Brownian motion. We don't know exactly where it's going to go, but when you look at the macro scale, there tends to be a lot more, there tends to be a more predictable pattern here, right? And lengthening cycles tends to be what we're going to see. So if you're a little discouraged by the fact that, if you're a little discouraged by the fact that we're likely not going to 20K in 2020, which is what we've been saying for over a year now, don't fret, right? I mean, it's a macro move, and I think we're going to get there. It's just going to take a little bit longer than a lot of the people that follow the 4-year cycle think. So I would say just hang in there. If we drop below the 20-week, for me personally, I'm going to use it as kind of like our final chance, right, to accumulate whatever we want to accumulate before the bull market really gets into gear. And again, there's a chance that it already is. So these are the two scenarios. We'll see how they play out, right? We'll see how they play out. Let me know in the comments below if you think we're going to hold the 20-week now, or if you think we're going to break it and maybe hold it down the line, maybe in about 6 months or so, sometime in 2021. Make sure you give the video a thumbs up. Make sure you subscribe to the channel. The last point I wanted to make is, I've been doing a lot of live streams recently. A lot of people ask me about, stocks and equities, right? And we do follow equities a lot, or we follow the S&P on the premium list. If you want to check it out, intothecryptoverse.com. Let me just remind you, if you guys want access to the premium content, you can go to intothecryptoverse.com. You get access to a weekly report, a weekly premium video, a risk dashboard, which is what I use to trade. It helps take advantage of bubbles. We took advantage of the bubbles that formed over the last couple months or so. DCAing out, so dynamically DCAing out of the market when bubbles form, either back into Bitcoin, back into USD. You get access to a strategy dashboard that helps you anticipate how you might want to handle your DCA selling over the market cycle. You also get access to a private Telegram alerts channel and a private Telegram chat room. So check it out. The prices are going up on September 28th. So if you want to get grandfathered in at the lower price, make sure you sign up before then. So I'll see you guys there. So the last thing, I really wanted to talk about was, where Bitcoin might head over the next few months. Because the main question I get, right, is, well, is it correlated to the S&P, right? And of course, this year it is correlated to the S&P, it seems. If you look at prior bear markets of Bitcoin, so if you look at these 3 bear markets, this one, and this one of them was negatively correlated to the S&P, one of them was positively correlated to the S&P, and one of them was not correlated at all. So in general, the bear markets of Bitcoin don't actually tend to be correlated to the S&P 500. This year in 2020, given all the stuff that's going on this year, it does seem, it doesn't just seem. If you look at the correlation coefficient, there is a correlation between the S&P and Bitcoin. We've also talked about on the live streams, or maybe not on the live streams, but on the on some of the chat rooms, that during election years, right? So during a major election like the one we're about to see, markets tend to dip a little bit. And the reason, right, is because markets generally don't like change. Markets like things to be easily predictable, right? And when you introduce some element of change that could occur, then markets can get spooked. So in this situation, you have to be careful. We've talked about equities too, but this is something to consider as well, especially given the amazing growth of traditional markets, right, over the last few months. And again, we even established that the traditional stock market, the S&P 500, hit the 0.8 risk level and immediately corrected. And we showed this on the premium list. So again, if you're interested in that, I put out an alert saying, we hit the threshold at 0.8. I'm selling this percentage of my stocks. And fairly soon after, we did see a pretty significant correction in the stock market. And then after the stock market corrected, then Bitcoin also has seen a pretty significant correction. So, what I'm looking for, right, is I'm looking for either the 20-week to hold now and for us to continue back up, or it's going to hold, in my opinion, in 2021, so the first test of it in 2021, and then we're going to go back to a sustainable $20,000 Bitcoin by the end of 2021 or early 2022, and then go into price discovery mode, taking us out through 2022, 2023, to the next paradigm shift in the price of Bitcoin. So if you want to be along for the journey, make sure you subscribe to the channel, give the video a thumbs up. Make sure you check out the Telegram channel and the premium list if that stuff interests you. And I'll see you guys next time. Bye.